compared to fiscal 2025. The increase in net sales was primarily attributable to an 8.9% increase in the weighted average selling price per pound, which was partially offset by a 2.5% decrease in sales volume. The sales volume decrease was due to lower sales volume in the consumer channel, partially offset by sales volume increases in the commercial ingredients and contract manufacturing channels. Gross profit margin decreased to 18% of net sales compared to 18.4% in the prior fiscal year, mainly attributable to the factors noted earlier in the quarterly comparison and lower inventory valuation adjustments, which were partially offset by aligning our pricing more closely with our commodity acquisition costs and the absence of a one-time pricing concession recognized in the prior year. Total operating expenses increased $3.2 million in fiscal 2026 compared to fiscal 2025, primarily due to higher incentive compensation expense. This increase was partially offset by the estimated insurance recovery related to the dry milk powder recall, lower compensation expense, a net gain of disposal of non-core equipment compared to a net loss in the prior year, and reduced marketing and insight spending and lower third-party warehouse costs. Interest expense was $2.4 million for fiscal 2026 compared to $3.6 million for fiscal 2025. Net income for fiscal 2026 was $61.9 million, or $5.26 per diluted share, compared to $58.9 million, or $5.03 per diluted share for fiscal 2025. Please refer to our 10-K for additional details regarding our financial performance for fiscal 2026. Now I'll turn the call over to Jeffrey to provide additional comments.
Thanks, Frank, for the financial updates. Now let's shift to consumption activity and category updates. All the market information I'll be referring to is Circana panel data, and for today it is for the period ending June 28, 2026. When I refer to Q4, I'm referring to 13 weeks of the quarter ending June 28, 2026. References to changes in volume are versus the corresponding period 1 year ago. For pricing commentary, we are using Circana MULO scan data, and we are referring to average price per pound. We are using the nut, trail mix, and bar syndicated views of the category as defined by Circana. In the fourth quarter, we continue to see modest growth in the broader snack aisle as defined by Circana. Volume in dollars were up 0.7% and 3% respectively, driven by price increases. This is consistent with the performance we saw in Q3. In Q4, the snack nut and trail mix category was down 7% in volume and 3% in dollars, which is a continued acceleration of the volume softness we saw last quarter. Snack nut prices rose 5%, with increases across nearly all nut types. Prices rose 7% for trail mixes. Our private label consumer snack and trail shipments performed substantially better than the category, with pound shipments up 3% versus last year. This positive momentum was driven by new distribution across several grocery retailers. Fisher's snack and trail mix performed better than the category, with pound shipments up 15%. Fisher's performance was due to expanded assortment in a specialty retailer and strength within the e-commerce channel. Our Orchard Valley Harvest brand, which primarily plays in trail mix, was down 26% in pound shipments during Q4. General category softness paired with lapping rotations at a club retailer drove the decline. Our Southern Style Nut brand experienced a 27% decrease in pound shipments, driven by a voluntary recall within the Southern Style portfolio, which Frank already mentioned. Now let me turn to the recipe nut category. In Q4, the recipe nut category was up 6% in pounds and up 12% in dollars, driven by growth in private label as a discount retailer expanded store counts. The recipe category experienced a 7% price increase, driven by pecans. Our Fisher recipe pound shipments were down 12% in Q4 due to slower velocities among grocery retailers. Now we'll switch to the bar category. In Q4, the bars category grew by 2% in pounds and 5% in dollars, which is consistent with last quarter. Bars category momentum continued to be driven by a branded player growth in the protein segment of the bar category. Private label was down 5% in pounds and down 4% in dollars, as consumer preferences shift to protein bars, which is comprised primarily of branded offerings. Our private label bar shipments were down 3% versus a year ago, which is consistent with private label category trends. In closing, as we enter fiscal 2027, we have strong momentum and optimism as we continue to execute our strategic plan. We are actively pursuing additional opportunities to grow sales volume across all three of our distribution channels, and we are encouraged by early signs of success. At the same time, we remain focused on disciplined cost management and driving further operational efficiencies. That said, we recognize that significant external uncertainties remain, including tariffs, inflation, unpredictable commodity costs, and broader macroeconomic challenges. These factors will require us to stay agile and responsive as the year progresses. We are committed to taking the necessary actions to deliver long-term sustainable growth, enhance margins, and continue to create value for our customers, consumers, and shareholders. As I mentioned last month, I will be stepping down as Chief Executive Officer in October to assume the role of Executive Chairman, and my brother Jasper will succeed me as CEO. Over the last several years, we have made significant investments in our people, our capabilities, and our infrastructure that we believe will support long-term sustainable growth. These investments, combined with a disciplined growth strategy focused on continuous improvement, innovation, customer partnership, and operational excellence, should position the company for continued success. Under Jasper's leadership, I'm confident JBSS will continue to execute its strategic plan, strengthen its market position, and capitalize on future growth opportunities. As I reflect on the past 20 years, I want to sincerely thank our current and former employees for their hard work, dedication, and commitment. Together, we have transformed JBSS into a stronger, more diversified, and more profitable organization while preserving the entrepreneurial and family-oriented culture that has always defined our company. Our ability to remain nimble, adapt to changing market conditions, and work collaboratively to serve our customers has been a key driver of our success and is a big part of our culture. It has been an honor to lead this remarkable organization as CEO, and I'm deeply grateful to our employees, customers, suppliers, and shareholders for their trust, support, and partnership throughout this journey. We appreciate your participation in the call, and I thank you for your interest in our company. I will now open the call to questions. Michelle, you can open up the lines.
Thank you. As a reminder, to ask a question, please press star 11. If your question has been answered and you'd like to remove yourself from the queue, press star 11 again. Our first question comes from Hamed Khorsand with BWS Financial. Your line is open.
Good morning. Could you just expand upon the comment that I heard you say about litigation expense and customer charges and what's going on there?
Yeah, so this is Jeffrey. So we had some unexpected deductions from a major customer that we are still negotiating with that customer to regain some of those deductions. So something out of our control that occurred in Q4, but we are working actively to try to get some of that money back.
Okay, and my other question was, any update as far as the new equipment being installed and acceptance with any new potential customers?
Sure, Hamed, this is Jasper. We're currently on track for both the high-speed fruit and grain and the chewy bar line. We're expecting the chewy bar line to be up and operational by the end of October, and then the fruit and grain bar shortly thereafter.
And any sampling going on right now, or you're still waiting to bring it completely online?
No, we are actually actively pursuing new customer business. We've created a lot of samples that have gone out to all our key customers. A very positive response from them. But yeah, the operation will be up and running. We're hoping in October to actually produce products. So as soon as we get a new customer online, we will start shipping in the third quarter.
Yeah, actually, this week we're testing the functionality of the chewy bar kitchen, and then we'll follow that with actually making the bars and then run it through packaging. So we're on time and looking in good shape for both lines.
Okay, great. And my last topic was As far as nuts and trail mix is concerned, are you changing productions to go towards more small packages in any way, maybe to lower the price for the consumer? Are you seeing that kind of demand right now?
Yeah, it's a combination. We're looking at innovation, obviously. Protein and fiber is a very important product line that we've recently launched in our Orchard Valley Harvest. It's Go-Go Protein Peanut, and we are launching a Go-Go Protein Almond. So really looking at consumer trends. Protein is high, fiber is extremely important. So we're looking not only at the product, but then also the pack sizes and the price points. So making really selective promotional price points that we feel will help us drive growth in the category.
Great. Thank you.
Thanks.
Thank you. Our next question comes from Nick Otten with National Bank Financial. Your line is open.
Hi, good morning, guys.
Good morning.
I just had some stuff on the charges and everything. So the higher input costs and transportation, do you expect that you can pass this on eventually, or is this continue going to be something that you're going to have to eat going forward?
No, we will do our best to pass out those costs along. Again, if they keep increasing, it becomes more difficult. But no, those were incurred during the quarter, and we will pass those along during our next pricing review.
And then how much of that was that in the quarter? Is it a small amount? Is it a couple $1 million? Or
it was a couple $1 million.
It was a couple $1 million, and we are working hard to get those price increases for freight with our customers today. So we should expect to see that in Q2.
Nick, it's mainly freight and fuel-related, surcharges, and also the resin market is up in packaging, which is kind of related to fuel also. So all those things that kind of escalated during the quarter that kind of out of our control.
And then on the bar lines, you were just talking about chewy and granola, but I thought you guys were also doing some protein going on there. So I was wondering when that's going to get started up because it is one of the bigger markets there.
Correct. Yeah, we through Q4 did commercialize both some fig bar offerings as well as some protein bar offerings. We'll continue to do so. We are running trials currently for other protein bars. We believe that some of those bars will be in the market sometime early Q3. But we do continue to add capabilities to our current protein bar line to keep up with the growing demand that Jeff referred to with some of the branded players.
And then how long, you're talking about this $300 million opportunity, is this you can achieve it in a year, 2, 3? What is the timeline that your expectation for this to really start ramping?
Yeah, if I had to guess, somewhere between 3 to 5 years.
And then do you have, are there any customers signed up at all? Is Costco a customer, or what's going on just to underwrite these investments overall?
We're actively working with both large retailers as well as some opportunities we've come across in the co-man channel.
Yeah, so we're looking at everything from club channel, obviously Sam's and Costco, to grocery, alternative channel, there's opportunities. And as Jasper mentioned, co-man, some of the big brands could be potential customers as well for us.
And then
you're right, the fastest growing segment is that protein forward. So you look at Barabel's, Built Puff, David's, and they're all doing extremely well in the category. And retailers see that growth and are looking for private brand options.
And then, Frank, we talked about it in the past. Are we just finally seeing this nut price squeeze these smaller players that had still in share, but they're coming back your way and everything?
Yeah, indirectly, yes. We're seeing because nut prices are elevated, it is a little more competitive out there.
And then if we're having an El Nino year, so are we going to go through this cycle again where nuts are going to get all this rain, we're going to see lower pricing and then more competition, or what are your expectations going for next year?
We haven't seen any effects from El Nino yet, but the crops look pretty decent out in California with maybe the exception of the early indications of the almond crop, but all the other crops look like they're in pretty good shape.
Okay, thanks. That's it for my questions for me.
Thank you.
Thank you. Again, if you'd like to ask a question, please press star 11. Our next question comes from Ron Miterko with MCM. Your line is open.
Hey, hi guys. Thank you. And Jeff, thank you so much for for your stewardship of the company, and we appreciate your candor and your working so hard for us. I just had a question. I think a lot of my questions were answered by the previous two guys, but just to summarize the VAR business, like you are going to be targeting the higher end in the protein and fiber content things, but doing it in a private label way, so as not to because the market is seemingly is growing away from just the real high-priced branded contingent. Is that correct? And do you intend to do anything, proprietary in your own branding at some point down the road?
Yes, right now we're focused on just getting the successful brands emulated and get private label offerings in the retail market. I think the co-pack or the co-manufacturing opportunity for some of these brands does allow us to get into other channels where private label wouldn't work, for example, sports stores, gyms, and things of that nature. But yeah, at some point we will work with our customers to develop proprietary formulas for them.
Okay,
and I would just add to that. So if you look at the category, you've got the biggest volume would be something like fruit and grain, the chewy granola bars. These high-speed lines will make us more competitive in those categories. But then the bigger focus is on research and development, innovation in the forward protein bars, as I mentioned earlier. And that's where the biggest growth is coming from, is those high-protein bars in the category. So we have a combination of kind of the volume items with chewy granola and fruit and grain, but then the high margin, high growth in the protein forward bars.
Okay, and and from the acquisition, it sounds like you're putting in the new lines are going to be in Elgin, like where you guys live, and would that be like new technology that you've had to adopt from like the bar business that you bought? Or I know you guys have been in the bar business for a long time, so could you just talk a little bit about that?
Sure. This is Jasper. The two high-speed lines are really balancing out our manufacturing capability. Obviously, there are certain SKUs that are high volume, which we will be moving to the high volume bar lines, but there are a lot of other SKUs that we have, both at large retailers and smaller retailers, that would not warrant running on a very, very high-speed bar line. And so much like we did for Snack Nut and Trail, we developed our manufacturing capabilities to run low volumes very efficiently as well as high volumes very efficiently, and that's really what this investment represents, is just balancing out our manufacturing capabilities to better fit our customer demands.
Okay, and those lines will be up and running by the end of October?
Q2 and Q3.
Okay. Good. Thank you very much.
Thank you.
Thanks for the questions.
Thank you. I'm showing no further questions at this time. I'd like to turn the call back over to Jeffrey Sanfilippo for closing remarks.
Thanks, Michelle. So we appreciate your participation in the call, and thank you for interest in our company. I would like to mention that upcoming events, the company will be presenting at the BWS Financial Growth and Values Summer Investor Series Conference in New York City this coming Tuesday, August 25th, and the Midwest Ideas Conference in Chicago on August 27th. Qualified investors that would like to schedule a meeting with management should contact Three Part Advisors at the phone number below. Thank you for your interest. Have a great day.
Thank you for your participation. You may now disconnect.